Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 3rd day of February 2015, and this is the daily report for gold and silver. We have a mixed bag with dramatically lower pricing in gold, higher pricing in silver, and platinum. Palladium in essence unchanged on the day. First to gold. Currently, we have gold trading off approximately $13 on the day, $12.60, $12.61 current print on the screen. We have had a high of $12.85, a low of $12.56 on the day. Silver, along with the other industrial precious metals, trading higher today. Platinum up about $7 on the day, silver up about 8 cents on the day. Over $17 per ounce, $17.28. The high $17.70 and the low $17.06. A little bit on silver towards the end of the show. So traders, what do we see going on? We have had interesting days in the markets. We've had extreme volatility, but do we see any kind of trend kind of emerging out of this? And the rough answer to it is yes. It does seem as though, at least for a short time, we might see a return to an upside stock market. We might see a return to dollar finding a little bit of resistance, as well as oil bouncing off of the most recent lows. Now, we are looking at a weekly chart. We started really looking at this on Friday of last week. We identified a single candle type, this called the hanging man, this one right here. We talked about this yesterday. We also talked about the fact that to take that call, in other words, for this candlestick pattern to actually trigger a sell signal in the market on a weekly chart, we need to see a confirming candle. We are certainly getting that confirming candle, market trading 1261. But if you notice now, we do have a long red candle, and that red candle, absolutely, it began with a lower high. We talked about that yesterday, but we are starting to see really a long body develop, meaning a lower low is quite possible. Remember, it is only Tuesday. We've got the majority of the week really still ahead of us. So what are we looking at? First, let's take a look at this incredible move that we saw in the equities markets. And traders, to do that, I've pulled up our half-a-day chart, E-mini, S&P 500. I believe the Dow Jones closed up either almost 300 points or over 300 points, but when I looked at it last, it was trading substantially higher. As I said, almost 300 higher. S&P's now back to 2040, 2041. We can easily identify this hardcore support that we have spoken about on a number of occasions. Now we've in essence got a quadruple bottom, or at least a triple bottom. You've got points in which the market is traded at or slightly below this point. You've got points in which it traded to that area to find support, such as right in here. And this most recent low, we get some of the lows going below this point, but none of the real bodies, the relationship between the open and close of these half-a-day sessions. So we've got a tremendous move back in the equities markets. Take a look at the dollar. This, of course, being a daily chart. We've looked at this chart on many occasions. Let me go ahead and kind of compress it. We can only compress it this far in daily. We can move it back to our weekly chart in just a little bit. But there is absolutely no doubt right up here at about 95, we got some real resistance, 96.57 being a 50% retracement. And of course, we really needed to convert our daily back to a weekly chart to see where that 50% retracement came in. So you can see this marker right here represents the beginning of 2014. Market trades pretty much sideways on a baseline at around, 80 for quite some time, has that linear move up, and absolutely, categorically, without a question of a doubt on a technical basis, we have some real resistance right here, 96 96.25 is the actual number, not 57, 96.25. We've got some real resistance there. So we've seen stock market really take off. We've seen the dollar under pressure. And lastly is oil. So traders have gone ahead. I pulled up this monthly chart. We've been looking at this chart over the last couple of months as we had this dynamic drop. And if you recall, we identified an area within the marketplace itself that I believed should be a pretty critical, almost line in the sand in terms of where we needed to find some sort of support. It's based on dual Fibonacci retracements, both from different tops, both to this record low here at 32, one beginning here, one beginning here. And what we get when we create this particular set of fib retracements is this band between 48 and 52. And guess what? We are back within it. And now when we look at this chart, there can be no doubt, on a technical basis at least, there is some importance to this area, because granted, it's only the third day of the month, but look at the move that we've seen off of this. Now, this could inevitably be a red candle by the end of the month. It could have some strong weekly candles and close weaker. We don't know yet. What we can say is for a couple of day move beginning of February, there is some real support coming into the market. And of course, that move up is one of the contributing factors to the equity market rally that we're seeing, is that gold has actually, that oil has actually shown some support and moved up off those lows, is back above $50 per ounce. So traders, what does that mean for gold? Well, we can certainly identify our current level of resistance. It's a band, begins at 13. And goes up to this top at about 1308. We were looking for a top between 13 and 1312. We certainly got that. We've also identified a potential model or a wave count looking at this as wave 1 and wave 2. The real question is, have we seen a conclusion of wave 3? Are we in a wave 4 scenario? We'll have to see how that kind of unfolds. It hasn't been as clear-cut as we've seen in the past. What I mean by clear-cut is when you have a correction where you've got pretty much, regardless of the candle box size, meaning the distance between the open and close, you do have, in the majority of these corrections, a abundance of red candles. You can see a couple of points in which it tried to consolidate and find some kind of footing, only to move to lower prices, again find some footing, only to move to lower prices, finally finding support. Well, let's look at the most recent activity, and the recent activity has been volatile to say the least, because we've had these surges up, surges down. We can see right in here you get alternating candle color, but the predominant factor is that it's alternating candle color with a net result of lower pricing in gold. So my sense right now is that, of course, we want to look at different levels of support and resistance. I believe that 57 right here, this is an area that could provide some support. We'll have to see. And then again down at 46. These are levels that are quite acceptable even in a bullish model, as long, and this is what's critical, as long as price point stays above these most recent tops here. So you've got a higher high. When you compare this high to this high, you've gotten higher lows. And so if the market, in fact, finds some support in this area, stays above these most recent tops here, we could seriously still be looking at a very minor correction before returning to an upward or an ascending stance, so to speak. The real question is whether or not that is how we'll see this unfold. We just got out of a great trade last week. I feel my job is to present profitable opportunities. My job is not to always keep us in the market, because always keeping us in the market doesn't guarantee profits. And profits are what's important to me, not market exposure. That being said, we are remaining flat in the market for the time being. I want to see if it finds support here or if it breaks through here, and then we will act accordingly. And then traders, lastly, a quick look at silver. Silver is trading higher, this being a daily chart, but I draw your attention to the type of candle we're looking at today. This candle would either be a shooting star or an inverted hammer, just like the hanging man that we identified on our weekly chart. This candle is part of that umbrella group of candles. Tail size 2 to 3 times the length of the real body. Real body very, very small. And this has a small lower wick. You would like that to almost be absent. So less of that, the stronger this particular candle type. But again, it's a single daily candle within the context of no confirming candles. So not a lot can be made out of that yet. In terms of various levels of support and resistance, the real key in terms of support is this 38% retracement. I believe we've identified that at 1680. Resistance right now, 1755, 23% retracement level. And though this is the area we want to see it break one way or the other to give us more information. This has been Gary Wagner wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.